Good morning. I hope you're doing good and welcome to today's edition of the London Session Open. My name is Alejandro Zambrano, Chief Market Analyst with TradeCaptain.com. I'm going to provide you guys with a quick update on the markets. Before we start though, as always, I need to stress that trading financial markets is unfortunately risky and there's a genuine risk that we'll lose all of our invested money. So please bear that in mind before you start trading. And as well, please bear in mind that we're all going to take a look at live technical analysis here. I'm going to provide you guys my view on the market, and obviously I've been doing this for quite some time, but even if that's the case, like with all trading, you definitely don't get everything right. And just because I think something's going to happen, it doesn't actually have to happen. And just because I'm doing something on my account doesn't necessarily mean that you should go out and do the same on your account. So please bear that in mind. Okay, so let's kick off and welcome everybody. Let's begin with the euro. So this is the euro versus the USD, and the market did try to break below the January 30th low here of 123.35 yesterday. It did try to trade lower here, and at one point it was looking quite good, like it was gonna trade lower. However, though, the market bounced to the upside. Myself, I was very tempted to actually short here, and I had my finger on the trigger, but looking across all the other currency pairs that trade against the dollar, my intuition just told me that most likely it was not necessarily going to work out. So I didn't actually pull the trigger here. Now, looking at this today, the market is short-term bearish to some extent, right? At least in the very short term, below this high here created on the 6th, which is yesterday. This is yesterday's high, so maybe we'll drift a little bit to the downside. But if we zoom out a bit, take into account more data, then you can argue that this is just a sideways market. So with that in mind, I do want to sell, but I do think it's probably better off selling on a break to 123.12. Take this level out and we could potentially go down to the next level. Here's Bitcoin, and people like all these holders are enthusiastic. So Bitcoin has risen some. It's risen by about 32%, and some headlines this morning is like, has Bitcoin bottomed out? And you know what, maybe it has, but technically it hasn't. Technically the trend remains bearish. You might remember we said look to sell here for this to go down, and then we said if we take out this low we can go even lower, and down here yesterday we said that, well, if you want to short, then it's up here starting at 7,292. Why? Because this is a downtrend, right? It's a downtrend in the short term. In the bigger picture, then yes, okay, maybe it will bottom out here, and maybe this was the low. However, though, looking at this from this sort of perspective, the market remains bearish for now. So I think it's probably going to roll over right where we are, maybe go a little bit higher, and then it's probably going to go down again. And then what I will do, if price moves all the way back down to the low, is we're going to lower this. So the new key level is going to be down here. And then obviously when we break this series of lower and lower highs, then I'm going to turn bullish. Now the problem with that everybody needs to be fully aware of, that is quite a strong rise from this level all the way to the high. So what is happening is that we're giving up the first part of the gain to hopefully then be part of a nice strong uptrend. So we're giving up this, the first part here to avoid just losing a ton of money if it doesn't bottom out. So you need to be full aware of that, giving up some gains to hopefully have a better signal. Here's the price of crude oil, and this is quite straightforward. Yesterday we reached the sell zone. You might remember I was bullish, and the market just sliced right through my support levels, got stopped out, and because of gold, stock markets, euro, pound, Aussie, New Zealand dollar, you look at all of those and it's relatively easy to just add things together. And I just took a fib this time around from this low to this high here, and I said that probably around these levels people are going to short. So indeed it reversed from 64.12. Doesn't have to be that we properly have rolled over, but I do think so. I think we're probably going to go down, probably even take out this low, target this level here, and then maybe all the way down to 61.20. So I think it makes sense to be bearish. And be bearish below this high here, which we actually can reduce a little bit. So we can, I think the key level now is 65.49 up here. Here's your price of gold. Moved all the way up, but as the stock market has recovered, we have seen this market go down as well because of our general dollar strength. We've seen this market go down. It may go up. This is the original sort of entry at 1,337. We corrected almost 50%. This is your 4-day exponential moving average, and I think from this level it's probably gonna go down again. Might spike a little bit higher, but in essence lower. Zoom out a bit. Isn't this a head and shoulders? Head, right shoulder, left shoulder, and the breach already happened over here. Sure looks to me like that. And from that perspective, the difference between the neckline and the head suggests a potential decline here to 12.91, which would be fair anyway, because if you look at it from a bigger perspective, this was a strong high, and in the big picture we are trading sideways here. Finally, S&P 500, sorry, DAX 30, not S&P. DAX 30, you know, it obviously declined, and then it wants to test the breakout level. This is fully normal. Moved up, and I think now didn't go all the way up I wanted to. I don't actually have a strong trade view or idea here, but I think now it's probably going down, and then eventually, you know, if it actually manages to stabilize above this low, which is the low here from August last year, then, you know, probably up again. But now we are in the process of moving down, so we're in this leg, I suspect. I'm not sure if we're gonna move all the way back to the low. So there's two strategies here that people can employ. One is, you know, looking to buy dips down here, stops below, but that means as well that you're buying this quite aggressive downtrend. The other section, or the other part, or other way of attacking this is to look at it from a short-term perspective. So if we look at it from a short-term perspective, the price is creating lower and lower highs, and because of that, it suggests us that we should be bearish for now. And obviously, when we stop creating these lower highs, that will mark potentially the end of this downtrend, and at that point it's time to be bullish. And that, guys, is today's market update. Alright, good. It looks like we don't have any questions today, which is fine. I'm gonna wrap things up now, so thank you so much for joining me. Don't forget to join me at the same time tomorrow, and don't forget to check this out. We have live trading on the Canadian non-farm payrolls. Very good thing to trade. We've been doing this already 2-3 times here, and it's been working out good most of these times. As well, we did the Aussie dollar on the back of the non-farm payrolls for a nice 100 pip return. So join me this Friday at 9:15 a.m. London time for this webinar. It's not in this same room here, rather we use another software called GoToMeeting. So to join there, you just need to register, and when you register here as well, you're going to be a member of Trade Captain Basic, and that means that you can access and join other webinars. As an example, we have 2 other webinars coming up in this month that we're going to add to the system in the next day or 2. As well, you'll have access to more of these live trading events. Okay, guys, have a great day, and I'll see you guys tomorrow, same time. Don't forget to like, don't forget to share. Thanks so much for watching. Cheers.